Welcome back, everybody. This is Salvatore. Today, we're going to be chatting about the importance of having a training plan. I'll give you a little backstory. It was the beginning of this year, end of 2022, where every year I go and I look back and I do like a yearly, I call mind sweep. And I was going into this year, 2023, and I was looking at my my trading plan because I was trying to get way more serious about trading. And I had a strategy, but like I really hadn't looked at my trading plan in a minute. And when I went and I looked back at it, I was mostly taking funding challenges in the past. And also I had, small personal accounts and stuff like that. But when I went and I looked at my trading plan, it was some crazy shit. Like I was risking like 5%, 2 to 5% per trade setup. Now that's not bad. Don't get me wrong. But most of the time I was trading like funded accounts. So why was I ever risking? Who told me it was okay to risk 2 to 5% per trade? Way high risk, right? So it really didn't make sense. Fundamentally, when you're a beginner trader or when you're a trader in general, if you don't know your trading plan like the back of your hand, I think you won't be as consistent as you would like to be. And shout out to this book, Trading in the Zone. I'm rereading it for this is like second or third time this year, and it really helped me to have like recognize my aha moment. I had my aha moment before I read this book, but I've been trading for over 5, 6 years. And during those times, I remember in 2020, when I was trading gold in US 30, I really didn't have a trading plan. To be honest, I really didn't have one. And I thought to myself, well, I probably could have avoided years, at least a year or two of playing around, I think that if you're going to get into this market, you're going to get into the skill of day trading, you have to make a decision. Are you going to do it or you're not going to do it? What kind of relationship do you want to have with it? Either way, you need a trading plan. That's the truth. You need a system to follow because it's not your strategy that's scalable. It's your system around the strategy that's scalable. I'll say that again. It's not your strategy that's scalable. It's your system around the strategy that's scalable. Same thing with e-commerce, same thing with entrepreneurship, high performance coaching, that kind of stuff. Like you have to build a system, and the system is what scales, you know? So for trading, it's the same thing. You have to know your trading plan like the back of your hand, what you're looking for. You want to know what you're looking for, how you're doing your analysis, what pairs are you trading, what time frames are you trading, what's your risk to reward, when when do you stop trading for the day, and we're gonna go over all of that right now. And this is simple. This is not hard, but this is my personal trading plan, and Trading in the Zone, Mark Douglas talks about having a trading journal, and we're going to talk about that and the importance of that. But what you're seeing right here is actually Notion. Notion is actually it basically is like my project manager. I'm big on project management. I love keeping my life organized. I'm a Virgo, so I like the nuts and bolts of things. Pause. And yeah, so we're gonna get into this. So my plan for trading is this. This plan is to be followed to building discipline and consistency to profit and scale Forex accounts, right? Simple objective. My trading plan to identify my trading plan or strategy, or part of my strategy or my analysis, is to identify trend on the higher time frames, right? I like to always look for trends because the trend is your friend, right? It's the example of if you're going in the direction of a river, how hard is it going to be to go upstream? It's going to be hard. Why not just go with the flow? And that's what the markets are. The markets is just a river of currency flowing, psychological river, up and down, up and down, up and down. All you got to do is get in, you know, with the right risk to reward on a good setup, and you're going to make money. So you can, you know, although all the time we take counter trend setups, right? But that's just my personal opinion. I like to go with the trend most of the time, but you know, sometimes not to say that sometimes you go against your plan, but in your plan, you want to have multiple setup ideas, you know? So I identify support and resistance zones, right? With those support and resistance zones, sometimes I'll identify order blocks, you know, small order blocks, small areas of consolidation. And I'll draw lines all over my chart. Like this is my US 30 chart. I'll take you to the 4-hour time frame. But like this is how my chart looks. You know, it's not complex. There's not too many lines everywhere. You know, it's very simple. My strategy is strictly based off of price action, market structure, and trend lines. You know, it's a confluence-based strategy, meaning I need, you know, multiple confirmations to take trades. So I identify the support and resistance zones, and after I identify those zones, I love to draw trend lines because trend lines are so underrated. Like you can see them everywhere. Everywhere you look on a chart, you can see trend lines. And eventually you'll get better at the ability at identifying a trend line and when a market is going to respect that trend line specifically. In my opinion, if a setup is respecting a trend line and a support and resistance zone, probably 8 times, 9 times out of 10, I'm going to take that trade, you know, because it's one of the 2 most powerful confluences involved in my strategy, basically. And then I'll choose a direction for that day. So this is what I do when I go to my computer. You know, I go to my computer, open up the chart. I'm identifying a trend on the higher time frames, support and resistance, trend lines. Then from that point, I'm going to choose a direction. What direction am I going to see? And to keep in mind, this is for intraday strategy. It could be used for like a day trading setup where you hold for a couple days depending on the setup. But this is mostly mostly tweaked for intraday, meaning getting in and getting out the same day. And I like that particular style because I've been a swing trader since 2017. But before 2018, before I was swing trading, I was intraday trading in 2017. And I liked it because I was able to get it in and out of the market in 2-3 hours. Although I love the idea of holding trades and maximizing profit, I do like the idea of getting in and out of the market the same day. Because sometimes I'll do a little bit of both. Either way, this doesn't change. You know what I mean? My habit and ritual of doing this doesn't change. So I choose a direction and then I look for entry on the lower time frames. If it's a bullish entry, I'm entering off of support, a trend line, or a higher low. If it's a bearish entry, I'm entering off of resistance and a lower high from a trend line. So that's just what I like to see, you know, a lower high off of a trend line, maybe a little retest, and then I'm going to take it down to the downside with my stop loss at previous market structure. So my strategy rules, this is for only funded accounts, because on my other accounts, for example, I have a few $1,000s in an account. I'm risking way more than 0.05 to 2%. Yes, that's the truth. Because at that point, it's not about the percentage. For me, it's more of a numbers thing. And some people, it's the other way around. Some people will be like, oh, you know, when you're a pro trader, it's more of a percentage thing. Well, I agree to disagree because it all depends on your goals as a trader. If you are a pro trader or not, depends on what you're doing, you know? So if I have $1,000 account and that's all I have to trade with, some people will say, oh, go the prop firm route, blah, blah, blah. I like the idea of trading with my own money. I've always have. When I was trading in 2016, 2017, prop firms, I had no idea about them. I think I knew about one, but I was only trading futures at the time. And I think I tried to take a funding challenge in 2017. I think I did actually. And of course I was unsuccessful. But I still like the idea of just trading with my own money, because there's no limitations on it. And it's all about really what you can psychologically handle. So I'll move on. My rule is to never have active more than 3 positions. If you lose more than 1% in a day, stop trading. Never risk more than 50 pips for a stop loss on indices. I like to trade indices and gold. Those are the only 2 things that I'm focused on right now. Why? Because I've been trading in indexes since 2017, from 2018, 2019, or 2018, to 2021. I'm mostly focused on currency pairs. I'm mostly focused on US 30 and gold. And then in the past year, I've done more currency pairs. But the truth is, I don't like them as much as I like gold and US 30. So I tried it. It worked. I passed the funding challenge, flipped a couple accounts in a month. It's cool. But gold, it just, I like to know, not right away, but I like to, know in a day's time if I'm right or if I'm wrong. And because it, in my opinion, gives me the speed to be able to rectify my bad habits or faults in the market. So that way the next day I can adjust, Swing trading is a little bit more difficult because if you're waiting a few days for a setup, it's like you're only taking 2-3 setups a week, even less sometimes if you're a swing trader, which is not a bad thing, but you have to have so much patience in the learning process, especially if you are a beginner. I honestly don't like that. I think, for beginners, they could trade, they don't have to trade US 30 regular contracts. They could trade mini contracts and stuff like that, which is super cool. Same thing with the S&P 500 and the NASDAQ. My risk to reward is 1-to-1, 1-to-2, 1-to-3. I like 1-to-1 to 1-to-3. Sometimes I only get 1-to-1. Sometimes I get 1-to-3. It all depends on the setup, and it all depends on how psychologically strong I am to hold that position. With the volatility of pairs like gold and US 30 or indexes in general, could be harder to hold a position and manage a position without it, fully, being in control of your psychology. You always need to check on it, in a day's time, because I've seen it can go up and down in a matter of, a day, and it does. My take profit strategy is once it hits take profit 1 or take profit 2, I take 75% of partials and move stop loss to entry or 10 pips below entry. So I, more than recently with US 30, use once the trade hits take profit area, I've been usually just taking majority of all of the profit. And I like it like that, to be honest, because I'm also trading on 3 or 4 different accounts. So I'm not using a trade copier yet, but it is difficult to be able to, okay, unless I actually trade with 2 phones, but I would literally need, on the one phone, it takes so much time to click the account, go to the other account, click the account area, go to the other account, let it load, manage the position. Sometimes US 30 moves so fast that you don't really even have that time. Sometimes on more sustainable moves that I've caught, I have the time to do it, but most of the time it's just a lot of work to go back and forth. If the first trade is a loss, it's okay to look for another opportunity. After 2 losses, stop trading. Stay consistent with leverage and stop loss. If you win 2 in a row, stop trading for the day. Never add a position to a losing trade. only add a position to a winning trade. So let me explain what I mean by this. So for example, in theory, let's just say, right, on this move right here, let's say I took a buy in this area right here. Let's see if I can bring the ellipse out. Can I draw a circle? Oh, this is great. Yeah, cool. So let's just say I took a buy right here, right? Market is respecting this trend line, hits the trend line, goes up, retests a major area of support. Boom, we're going to take this to the upside, right? Now, let's just say my take profit was just above this previous area of resistance. What I would do is that's a justification if price comes back to original entry, that to me is justification to add another position. The reason why is because it went into profit. It went into profit. And then it came back and retested the original entry, which US 30 does a lot. And then look what happened after that. Rose to a new higher high, maybe about, I don't know, what is that? I don't even know. This is a 4-hour time frame. So this is like 500 points or something like that. Maybe less, maybe like 200-300. So that is a justification for adding to your profitable trades. Instead of, let's just say I took a sell here, right? And sometimes it works out, right? Because you get to catch the drawdown. Some people do this. I just don't personally like doing it because now I'm risking way more than I should, and then I'm hoping and praying that my position is going to reverse. So let's just say I took a sell here for whatever reason, because it, retested this major area of resistance. I took a sell here, right? Downtrend. I'm thinking it's going to retest and go for more to the downside. Let's say I took a sell here and all of a sudden price goes up here to this area. I would not be interested in adding to the position. Sometimes I've done that though. Sometimes you break your rules, but there's consequences to breaking your rules. That's it. I wouldn't add to this position because it's not a winning position. I'm already in drawdown. Yeah, I can hope and pray. With indices, you can almost get very lucky often like that because the market will come. If you would have took a sell somewhere up here and all of a sudden it drops back to your original entry, now you can manage the trade better, right? Get out of your original position and then close the other position in profit. To me, that's way more risk. I would prefer to have my stop loss, let it hit my stop loss, wait, and then look for another entry. So that's my opinion right there. In terms of lot sizes, this is just how it is with, on different kinds of leverage. But for the most part, this is usually how it is. It's 0.01 lot equals 0.01 per pip. 0.1 lot equals $1 a pip. And then 1 lot equals $10 a pip. Now, this isn't for indices. This is just for regular currency pairs. But obviously, we know with indexes, it's 0.01 equals $1 a pip. 0.10 equals $10 a pip. And then 1 equals $100 a pip. Yeah, for indexes. Cool. So these are my pairs: gold, US 30, Euro USD, and USD JPY. I trade New York. How to deal with losses: I go for a walk, I do yoga, I breathe, I work out, I journal. And I've been getting into the habit of journaling every single day after my session. In my trading journal, I'm usually detailing mostly 3 things. 1, how I'm feeling or what I'm thinking about the trade when I'm in the trade. My entry, take profit, and stop loss. That's what I want to know. And then I'm also documenting if I thought what I could have done better. Could I have held it better? Could I have cut my losses sooner, etc., etc. So that's what I journal about mostly. My trading goals are 0.05 to 1% per trade setup. Personal accounts are a little different. My daily personal best, I want to be consistently between $200 to $300. And then on funded accounts, I want it to be $400 to $500 a day. That's for really my 25K account, which is 2%. On my 50K accounts, I'd like to have $500 to $1,000 a day. So those are my goals. And yeah, this is the importance of having a trading plan. I go over this a couple times a week, you know, and I've been making adjustments to it regularly to fit my lifestyle, which you should too. So I hope this helped. Like and comment for more information and quality videos. Peace out.